Hey everyone, welcome back to Corporate Decoder, the place where let's just say sometimes companies have to make important announcements, and this one involves a bit of a financial shuffle that could mean a lot for the future. Today we're diving into a report from Safe Pro Group Incorporated. This isn't your typical earnings report, but it is packed with information about how the company is raising money and what that means for its shareholders and its plans going forward. Right off the bat, we see the standard filing header. This is the US Securities and Exchange Commission, or SEC, and it is where companies report significant business events. The date of this report tells us when the main event happened the 17th of October 2025. This is important because it sets the clock for what actions the company took. The company in question is Safe Pro Group Incorporated. They're incorporated in Delaware, which is a common place for companies to set up their legal homes, and they have a public stock ticker symbol of SPY trading on the NASDAQ. Now, here is an interesting checkbox they've ticked: Emerging Growth Company. This means Safe Pro Group Incorporated is considered a smaller, newer company under CC rules. This often comes with some benefits like being able to follow less strict reporting rules for a while. This section tells us about the company's stock. They have common stock, which is what most people think of when they talk about buying shares in a company. The par value is a very small, mostly historical amount, but the key is that they're trading on a major exchange. Alright, let's get to the heart of this filing. This section is all about a significant deal Safe Pro Group Incorporated made. They entered into what are called securities purchase agreements. So what does that mean in plain English? Safe Pro Group Incorporated sold 2 million shares of its common stock to some investors. Each share was bought for $7. The deal officially wrapped up on the 21st of October 2025. This is when the money exchanged hands and the shares were officially transferred. This number is crucial. Safe Pro Group Incorporated brought in about $14 million from this sale of stock. That is a good chunk of change. They'll use this money for working capital, and general company needs basically to keep the lights on, pay employees, and fund their ongoing operations. Now, there are some conditions attached. The company has promised to file a registration statement. Think of this as a formal document that tells the SEC and the public that these newly issued shares are now allowed to be resolved by the investors. They have to do this within 15 business days after the deal closed. And here is a big one for the company's strategy. For 90 days after the deal closed, Safe Pro Group Incorporated can't sell any more of its stock or anything that can be turned into its stock. This is often called a lock-up period, and it is usually put in place to prevent a flood of new shares hitting the market, which could drive the stock price down. There is an exception to that lock-up. After the registration statement has been active for at least 30 days, they can sell more stock. But, and this is a big but, the price has to be at least $6 per S-share. This shows the company is trying to protect its stock price and avoid selling shares too cheaply in the future. This means the shares sold weren't offered to the general public in a big initial public offering. Instead, they were sold directly to a select group of investors. This is a common way for companies to raise funds quickly without the lengthy process of a public offering. However, it also means these shares haven't gone through the full registration process required for public trading. This is standard legal language saying that the description in the report is a summary and the actual agreement attached as an exhibit has all the full details. This next section just reiterates that the company did indeed sell some equity securities, meaning stock, that were not registered with the SEC. It is essentially confirming the details we just covered in item 1.01. This is the part where they list out all the supporting documents for this report. Here is the actual list of exhibits. Exhibit 10.1 is the actual form of the agreement we just talked about. This is where the nitty-gritty legal terms would be found. Exhibit 104 is the interactive data file, which is helpful for analysts and automated systems to process the financial information. And finally, we have the signatures, confirming that the company officers are signing off on the accuracy of this report. The report is officially signed on the 21st of October 2025, which aligns with the closing date of the stock sale. The signature here is from Daniel Erdberg, who is the Chief Executive Officer of Safe Pro Group Incorporated. He is certifying that this report is accurate. So what is the big picture here? Safe Pro Group Incorporated, being an emerging growth company, has successfully raised $14 million by selling a significant chunk of its stock to private investors. This infusion of cash is vital for the company's operations and future plans. The restrictions they've agreed to, like the lockup period and the minimum price for future sales, suggest they're trying to be strategic about how they use this new capital and how they manage their stock value. Now, looking at this from a Warren Buffett perspective, this looks like a company that needs capital to operate or expand. Raising money through stock sales is a common strategy, but it dilutes ownership for existing shareholders. meaning each share represents a smaller piece of the company. The price of $7 per S-share is a key indicator of investor confidence at that moment. The fact that they're agreeing to not sell more stock below $6 in the future shows they believe their stock is worth at least that, and they want to protect against a future price drop. The main risk here is how effectively Safe Pro Group Incorporated will use this $14 million. If they invest it wisely in growth opportunities or strengthening their core business, this could be a turning point for the company. If not, it could just be treading water. The fact that they are an emerging growth company also means they might be less established, so their business model and long-term viability are still being proven. In conclusion, this filing shows Safe Pro Group Incorporated making a strategic move to secure funding. The terms of the deal indicate some careful consideration of future stock performance. The company's direction will heavily depend on how they deploy these new funds, and that is our breakdown of this Safe Pro Group Incorporated filing. What is your take on this stock sale and what it means for the company's future? Drop your thoughts in the comments below if this analysis was valuable. Hitting that like button really helps us out, and subscribe for more deep dives into corporate documents. Don't forget to check out our Discord community linked in the description. It is a great place to keep the conversation going. Thanks for watching, and we will see you next time.